Hello everybody. Now let's talk about euro against US dollar. So, euro against US dollar is currently moving into a more pronounced correction after the recent consolidation phase around 1.18. From a technical perspective, the pair has clearly broken below 1.17.5, 1.17.7 support zone and moved under 1.17, which increased short-term downside pressure. The nearest demand area is now located around 1.16.5, 1.16.7, where previous balance and buying interest were seen. The 1.18 area now acts as resistance. As long as price remains below that level, sellers retain control. On lower time frames, the structure looks impulsively bearish, and the current rebound appears to be only a technical pause rather than a confirmed reversal. If 1.16.5 falls to hold, the next downside target could shift toward 1.15.5, 1.16 area. From a fundamental standpoint, pressure on the euro has intensified due to rising demand for safe haven assets. The escalation of tensions in the Middle East has triggered a broader risk of environment which traditionally supports the US dollar. Geopolitical tensions also increase the risk of higher energy prices. For Europe, this is a sensitive issue as rising oil and gas prices directly affect inflation expectations and economic growth. This creates an additional headwind for the euro. At the same time, eurozone inflation continues to slow, giving the ECB more room for a potentially softer policy stance. While the Federal Reserve is also discussing possible easing, it maintains a caution tone. In periods of heightened uncertainty, investors tend to favor the dollar. Overall, the current decline in euro against US dollar reflects both a technical breakdown and fundamental risk-driven flows. As long as the pair remains below 1.17 and 5, 1.18, the short-term bias stays titled in favor of the dollar.